And we're here again for another Whale Club Hangout. This is our 27th episode, and we're excited to have both Bobby Lee, the CEO of BTCC, formerly BTC China, and Greg, the Director of Business Development. Thank you guys for coming on.
Thanks, Great, thank you for having me.
And, the real thing we want to get into more than anything for the very active traders is you guys recently launched the Pro Exchange. So, why don't you give us just a little bit of background as far as the transition from, being a spot exchange to now being, a place where very active traders are going to come. Give me kind of an overview and then break it down into the actual product that you guys are launching.
Yeah, that's great. Thank you for giving us opportunity to speak with the Whale Club. Very excited to be here. And indeed, we launched the Pro Exchange very much for an audience like yourselves. It's meant for traders. Traditionally, Bitcoin exchanges, Mt. Gox being the first one, we've seen Bitcoin exchanges for the past 4 or 5 years. And traditionally, it's always been to allow people to buy and sell Bitcoin, and that's meaning buy and take possession, or sell your Bitcoin that you've mined, or sell the Bitcoin that has appreciated in price. But as we know, over the last 2 years, trading has been a very a big activity in the Bitcoin space, and that both causes volatility and also reduces volatility. And what the Pro Exchange is, it's really geared towards traders. It allows people to buy and go long, go short on Bitcoin. And you guys know best, right? This way you do it in a leveraged fashion, and you could take directional bets on Bitcoin. And the less emphasis on whether you take delivery or actually you do a one-way kind of thing. So it's more for traders who want to trade the price up or trade the price down.
Gotcha. And just to kind of take that a little farther, does this come into kind of the umbrella of the rebrand? I know, it might be a little bit off topic, but can you explain a little bit the rebrand from BTC China to BTCC?
Yeah, absolutely. So the rebrand happened, we announced it in mid-September. We've been working on it for the better part of this year. As you know, as we all know, Bitcoin is global, and we also have a global audience. BTC China, our former name, we've always had users all over the world. In fact, we have users from well over 100 countries. And given there's some negative stigma attached to China, the word China, as well as the country and the market. So for those reasons, we decided that in the long term, given that Bitcoin is global, we want to present ourselves in what we want to do. Essentially, we see ourselves as a global company with a global mission. So the BTC China name was holding us back. So for the last year and a half, we've been thinking what's the right appropriate name. Picking a different name altogether and so on. But in the end, we came back to our roots. BTCC, these 4 letters, has always been the nickname of our brand and website in China. So we decided to pursue that. In fact, Greg helped us, acquire the domain name. And once we got that locked up earlier this spring, we went full speed ahead and stuck with BTCC. And nicely stands for Blockchain Technologies and Cryptocurrencies, which is what we've been all about, our vision and mission.
Gotcha. And on that same lines, as you're articulating the point that you want to appeal to, with the name change and the rebrand to much wider audience and kind of the international idea. I know one thing we always had an issue as traders is connecting to mainland China servers. So have you guys done anything to mitigate some kind of like the load balancers? I know like OKCoin.com has servers offshore, which makes people, from across the world be able to access the servers much easier. Have you guys done anything on that front?
Absolutely. We've always had our servers available outside of China. So for all of you, coming in with computers and IP addresses from outside of China, you'd be connecting to our cloud servers outside of China. So you don't have to deal with the Chinese internet.
Okay. And as far as what you guys have there for talent, what do you have for trader backgrounds and what markets do they trade so that they understand us traders more?
This is an area we continue building. BTCC Exchange built by a team of very experienced Bitcoin engineers and also traditional trading, commodities trading. So we brought best. It makes if you look at Pro, it allows it's an exchange you define Bitcoin with that long net short positions, and then you set up, you open the position, you close. So this is this is
Hey, Bobby, you're cutting out a little bit. Greg, can you take that?
Yeah,
This might be a
it
little bit
sounds like he's
connection issue
underwater
there.
from here.
That's okay.
Bobby, are you there?
yeah. Can you hear me?
Yeah, I have a lot of static here. Are you guys getting it clearly now?
No, maybe if you just want to take over the section, see if his connection improves.
Okay, okay. Well, I think that as far as the the talent that we have here, we have
Can you guys hear me?
yes, I can. So we have a lot of very experienced Bitcoin engineers here, and there's a lot of professional traders on our system. We take feedback from those people all the time. Be they in China or outside of China, and that gives us. I think that gives us a pretty good perspective on what people want because it is different in the different markets. People in China tend to like their websites a little bit different, a little bit busier than people in the States and elsewhere. And so we try to cater to both audiences as well as we can. And the Pro Exchange is really important for bringing some new tools into the mix that you would see at a more advanced traditional style trading desk. So that's really the in terms of implementing those tools, this was an important step for us.
Gotcha. So let's get right into the platform then, because I think that's what's going to be most interesting to many of the people listening. Is really you guys made this pivot and you guys have a 20x product. Now I see that you're not really using the word futures. You're using it as 20x exchange. You kind of tell me about that because at least when I look at it with settlement and such, it feels a lot like a futures product.
Yeah. Can you guys hear me? Should I continue?
Yeah, you're good now, Bobby. Thank you.
Okay. So there are technical definitions in terms of what's a futures product, what's a forwards. Some call it contract for difference, and to make sure we essentially call it a pro exchange. It's geared towards people who are trading uh, on the volatility and the price, but it's not. There's no future. There's no future delivery, right? It's you could open position, you close position. It rolls over day by day. It's probably closest to like a rolling forwards kind of thing. So every day there's carry interest. Long positions pay carry interest. Short positions receive carry interest. Can you guys hear me?
Yeah, I got that part. So, okay. So I certainly understand where you're coming from because, there's kind of like a legal definition of what a future is and what are being called futures, and
Yeah.
it gets a little bit ambiguous. So I see how you're trying to make that distinction there. So as far as let's talk a little bit about the Pro Exchange and how you guys set that up, essentially.
Yeah. What do you have any specific questions, or should I describe it in a little bit more detail?
Well, let's give an overview, and then let's drill into some of the specific features.
Okay. So obviously, like Greg mentioned earlier, we would love more feedback from your community. I think you guys are awesome, very experienced, and this is exactly the target audience we made this for. And we worked with some traders over the course of this year in fine tuning this product. I think you'll like it, but obviously, can you give us feedback? Essentially, it's a fiat. Right now, it's a renminbi exchange. Pro Exchange is renminbi based, CNY. So you would deposit money in here, and obviously, we also allow you to put in bitcoins. There's a conversion process, and once you have a renminbi credit, then you could take position, either go long on Bitcoin when the price goes up, you think, or go short. And we only trade in larger units of 1 Bitcoin without going into decimal places because of the 20x leverage. You only put a margin, minimum margin is 5% of your position, but obviously you don't have to go so extreme, So for every $1,000 or 10,000 RMB or whatever, you could take a position that's up to 10x or 20x that amount. And then same thing, limit orders, market orders, stop orders, and then you can close them out as you need to.
Okay, so one thing I do find immediately a difference, because many of us sitting here are very familiar with the OKCoin futures platform, and they require that you hold BTC, and that's your collateral as well as the unit you end up trading in. So you guys are actually offering it on the fiat side with CNY, correct?
That's right. So it makes calculations and thinking process much easier. This appeals to a wider audience. It's a much more approachable approach. It's a much more approachable system exchange for people to trade Bitcoin. It's very much like Forex, and you don't have to do the crazy math to inverse relationship with Bitcoin price and all that stuff. So if you think Bitcoin price will go up, you buy it at a certain price, and when it goes up, you make money. And it's simple as that. And if you think Bitcoin price will go down, likewise, you short it at a certain price, and when Bitcoin price goes down, you make money.
Gotcha. And Cratch, you want to weigh in here on some of the specifics?
Yeah, sure.
Right.
Oh, hi, Greg. So we also noticed that you have, instead of so-called socialized losses, you have something else called early profit assignment system. Now, it's just to put a long story short, the way I understand it is that if I'm a really good trader and I make a lot of profits, then I'm the one that's going to pay for people that get margin called. Is that correct?
Yeah, let me talk about the EPA. We nickname it EPA, Early Profit Assignment. It probably could use a better name. We need to figure out what the right message is, but we want to make sure we explain it properly both on the website as well as to this audience. Essentially, when you go long and short, in extreme volatility, unlucky account holders will get a margin call, and if they don't act in time, the price would go against their position faster, and then they would be enter into forced liquidation state. So a forced liquidation happens when we, the system, take over and slowly do a partial liquidation, a partial forced liquidation. We slowly clear out your position, whether it's long or short. So meaning if the price is falling, your long position is at risk, or likewise, if the price is rising, your short position is at risk. So when we partially liquidate you until you meet the margin requirement, the minimum, I think it was 2%, 2 or 3% margin, and what happens is if the price goes even further than your minimum position, then we clear you out. And sometimes on other future systems you see where there's a systematic loss, right? So we don't do that. We think socialized loss is a bad thing. It makes unpredictable behavior for people who've made money. It's overall, I think we have a much more innovative, a much more valuable method here. What we do is, in the case of a potential systematic loss, what that means is the loser has extra positions, either long or short, that they cannot get rid of at the market price without causing the system to lose. So we don't want the system to lose. We don't want the system to lose in the sense that BTCC doesn't want to lose money on this, and likewise, and because if BTCC loses money and goes bankrupt, it's bad for everyone, right? So in order to avoid a systematic loss, we do EPA, early profit assignment. What that does is essentially we match that losing position and we close out a similar number of contracts or similar number of Bitcoins for someone who took the opposite end. So whoever out there had a opposite position. So if the losing position is a short position, then whoever had the longest long position would get their position reduced by that number of Bitcoins.
So let me, that was a good explanation, and let me ask a few follow-up questions associated with that. So you're saying, like, for example, let's say it's a big rally like we recently saw. Granted, we crashed back down, but the person with the position that has the most profit on the books is going to be initially exposed, or is it the person in that settlement period that has the most profit? How does that? I'm a little bit fuzzy on that.
Yeah, we're fine tuning as we go as we speak, but essentially, the way it's going to work is that the let's use a concrete example. Let's say the price is going up. Okay, just going up the roof. So short sellers, end up being wrong because they've been shorting as the price goes up, and then they get squeezed. They get the positions liquidated. So someone who got in early as a long position holder, way early, essentially is riding all the way up. He didn't take any profit yet by closing out the position. So at the peak, the short position is completely out underwater, and instead of a systematic loss, what we have is the long position holder who's held it since the very, very beginning at the lowest price entry, if you will. Then on paper he's made a lot of money. His position will get reduced. So if he had 100 long positions and the missing amount was 20, then his position would get reduced from 100 to 80. So he'd be holding only 80 long Bitcoins at that time after the EPA assignment.
I guess where some of my concerns are, and I'll let like PizzPie step in here and maybe reiterate some of these points, is so say, for an example, let's say the top contract holder is at like 1,000 Bitcoin profit, like he's huge, and then second place is at 800. Does everything come out of the first holder until he's no longer the top holder anymore, or does it then funnel down?
Yeah. Don't think of it as which account made how much money. We're not. So this is a small misnomer here. We're not socializing or sharing profit from the richest person. All we're doing is we're saying whoever held the long position at the lowest price will, we essentially forcibly take some of that away. The position away. And by definition, if you've held the long position at the lowest price, by definition, your trade for that trade is profitable.
Okay, so just to reiterate.
I can come in quickly.
Yeah.
So I guess our understanding of it was the losses, the socialized losses, was based off of the people who were actually making the money, but now it's clarified that it's actually based on who has the order entry at the lowest price, and that's not indicative of the actual contract size. It's all just based where they actually got the order in. Is that correct?
Correct. So it's not based on their overall profitability because, as you know, people can be profitable 1 month or 1 week, but not the next month or next week or the next day. So it's not based on that. It's not based on how rich you are. It's not based on how tall you are, right? Obviously, I'm joking there. But what it is based on is for people who are holding contracts, holding positions in the gain, so to speak, on the opposite side, the winners, we're looking at whoever has a position that's at the most price premium from their opening position. So that position will get assigned to the loser position to clear his liquidation.
I guess where I'm having a little difficulty here is, let's just for simplicity's say.
I can explain it pretty good, Vix.
Well, let me ask the question first. Let's say user one has like one contract or one Bitcoin position, and he's held it since the bottom,
Yes,
And
that's right.
okay, now let's say big orca whale has only held it, for like the last $10 move, but he's up
Yes,
1,000 bitcoins. The other guy's up
there we
like
go.
10, right?
Okay.
How does that work? If you
Okay,
follow
so
me.
now that's a great example. So the first buyer, the first long position, long one has held it from the very beginning, only 1 Bitcoin. Long two is a big buyer with 1,000 Bitcoins, but only came in for the last $10 of appreciation. So at this point, let's say there's a forced liquidation to the point where the market would be too extreme in order to close a short position. It would be short squeeze, right, essentially. So the price keeps going up because of the short squeeze, closing out all the short positions, and they die off. And then at the time, instead of a systematic loss, let's say we're missing 8 Bitcoins. Okay, so we're missing 8 Bitcoins to cover the short position. What would happen is the guy with the lowest price would be that long one, and his one single Bitcoin position would be closed at that point. It will be closed, so he will be net zero position, and then the whale for the long two position who had 1,000 Bitcoins, his position would be reduced by 7 for a total of 8. So 1 plus 7 equals 8. I think I said 8. Yeah. So now his position would now be down to 993.
Okay.
And then the remaining 993 can still take in additional profit realization if the price keeps going up. But at least for the 7 positions that got closed, those would lock in at whatever $10 renminbi profit or thereabouts.
Okay. Cratch, do you have anything to add to this?
I think Bobby covered it pretty well.
Or Cratch? Sorry, Theo.
Oh yeah, I think it's covered pretty well too. I think
Okay.
that
Yeah. What do you
Yeah.
guys think? What do you guys think of it?
I'm still wondering how it would play out real time, and I'm kind of curious too to see, what it kind of like incentivizes me to basically play hot potato with the price. Like I'm going to be holding positions much shorter. I don't know. I think ultimately, if this is what you guys are going with, and I'm actually excited that you're doing something different.
Yes.
But ultimately, it's really you're gonna have to put it, into the wild, right, and see
Yes.
how it performs. So I think that's going to be the true test.
Absolutely.
I will say that some people know me and they know that I've been a pretty strong proponent of the socialized law system, often defending it when other people wouldn't. But it doesn't mean that it's the only system or always the best system. I think that can be very subjective. Some
Yes.
people love it, some people hate it, and there's a lot of in between there, and I think that's what you guys are finding a different solution. So I praise you for that.
Yeah, we hope you guys try it and give us feedback. We think it's very innovative, different, and in a good way. But obviously, what your opinion matters, and we'll let the market decide.
Okay, so it's a couple clarifying questions here, and actually, before you step down, I think I should probably try and find the actual screenshot. But you guys say you have advanced order typing like stops. Do you have anything other than market limit and stops? Like we have OKCoin with icebergs and TWAP. What's the front looking as far as order type expansion?
Yeah, we're working on those. This is it's a brand new system we built from scratch. So we need for you to give us some have some patience, give us some time, and we will put these in soon.
Gotcha. And then as
Yeah.
far as
We know that by your standards, these are not advanced at all. But we're fully aware of that, so we'll work hard towards putting in the iceberg and all the other the so-called the real advanced orders that you need.
Yeah, I mean, I think one thing that everybody on this panel will speak to that we've been saying it for like the last years. We always want basically like the OCO order, right? An order where I can set a trigger of where my price gets in, or sorry, my order triggers and it fills the order, and then immediately it has a stop loss and take profit. And that's very, very rare to find in the Bitcoin space. We found a lot of kind of like workarounds with that, but we've yet to see it really be implemented as a standard. So, the
I see.
icebergs and stuff they're great, and we enjoy those. But I think that's an order type that I don't know why for whatever reason, but we find it very rare. I think Bitfinex has it. So, but.
Okay, the OCO. Yeah, we'll take that down and work on that.
Okay, so moving on, I think another thing that we need to know about the Pro Exchange are how are you guys kind of segregating that risk from the user standpoint? Is the whole account, like as far as like a cross margin system, is that how you're determining, this 5% collateral, or are you able to partition those positions in kind of a fixed margin type system where each position is essentially its own entity? I don't know if you're familiar. Do you understand what I'm asking?
I may not fully understand it, but let me take a stab at it.
Okay.
Essentially, the Pro Exchange has a different account management system than the Spot Exchange. So everything in the Pro is by itself, and apart from the original BTCC exchange. But within the Pro Exchange, there's no further segregation at this point. If you have some good ideas, I'd love to get your feedback on that.
Well, I'll let some of the, PizPy, you use fixed margin, correct?
Yeah.
And what do you have to say to that? Because you use it more than I do.
I think the biggest thing is just people don't want to expose their risk to more than what they're trading in that position size. So I guess we want to be clarified that if they go below your margin calls, it's not going to wipe out your entire account. Like, are those positions isolated?
Not at this point. So it's the whole account. So we're not. How do I say this? So it's one account essentially. So it's one pool, and if you go long position and you only use, let's say, 5x margin, then what that means is you have plenty of depth, so the price can go down more than whatever percentage is without killing you, without wiping you out. Does that make sense?
I think what he was getting at is that is whether or not if you transfer anything over from spot, if you say you're force liquidated on Pro, if that would affect your spot account as well, and the answer to that is no. They're segregated in that way. So what you're holding on our standard exchange, on our spot exchange, is not exposed to any sort of losses that you would have on the Pro.
Okay, thanks. Yeah, like what I was trying to say, like on OKCoin, for example, if I open up a 100 contract position, the maximum liquidation will be just for that 100 contracts, and it wouldn't touch the rest of my account. So you're saying
precisely the same.
My rest of my account would be protected.
No, hold on. Greg is not. Greg is not correct.
Okay.
Within the Pro system, if you open up long positions at different times, it's all part of the same pool. What we are saying is that on the spot side, it's segregated, but within the long pool, it's all together.
Yeah, I see what you're saying.
Yeah, I get it too, and I actually want to add in a little bit of kind of color to this and why this is important. Because what you'll see, for example, is a very active trader, and we'll get into this. Are you guys going to have different duration contracts? Are they all the same? Maybe we should ask that first. Is it all just one contract, or do you have different settlement periods?
Yeah, there is no settlement. It's daily, right? There's no settlement. This is why we don't call it a futures exchange. This is different beast than what they have. This is very much closer to a spot market. This is like a rolling, it's not a futures product. I know both regulatory-wise it's not futures, and also, it's not for you to go and there's no closing update to the settlement date. There's no like pre-settlement hours of people trying batting down the price or pumping the price and stuff like that.
Okay, well let me give you an example, and actually another question before I get there. You guys aren't allowing people to be simultaneously long and short, correct?
Well, this is a misnomer. I think this is a misnomer. If you're simultaneously long and short, you're just net 0. If you're long 5, you're short 10. You're short 10 positions.
I
Right.
used to agree with you, but I actually think from the trader perspective, there's a psychological component because I can see in like, for example, this last big run up.
Yes.
I know, probably me personally and some other people were long a quarterly contract, and that was
Yes.
kind of our primary position, but we
Yes.
were scalping on the front week shorts, right? But one thing I want to know is like I'm still counter trend trading, but I want that position to be segregated so that if I'm really wrong and it blows out that position, I'm not stuck in it with my equity going, because people have to sleep eventually. And, my primary position, which is the long, for the longer term time frames, is still working. And that thing is still going to be showing, continued profits with a lower base price, because that's the
Yes.
psychological component. And it's very important. Traders really have a aversion to seeing any like negative or red on their screen. So they would
Yes.
rather hold that position for the duration and scalp with a different contract to mentally segregate that.
Yeah. Unfortunately, we have a different type of situation here. This is not. Yeah, I hear what you're saying. Maybe one day we will build something to address that need, but for now, this is more of a. We built this for traders, and you guys are very, very professional traders for sure. But we try to make it more inclusive. More a more for the more casual audience. That's why we have this system in place where there's no different. There's no like quarterly contracts, monthly contracts, weekly contracts. There's none of that kind of complexity. Does that make sense?
Gotcha.
Yeah.
Yeah.
I have a question then regarding that. Are you gonna maybe allow sub accounts? Because then I could go, like if I had my account number 1 and account number 2 in Pro, then I could go long and short, and each Pro account would just be isolated, basically.
Yeah, that's a great suggestion. Let's take that down, but we don't have that today, unfortunately.
Okay, great. So you said it's a rolling future or rolling forward or whatever we're going to call it. So there's no daily settlement at all, or
correct, in the sense that there's there's no settlement in the classic sense. There's no situation where everybody closes out and we calculate profit for everyone. It doesn't happen like that.
Okay, so is there a modification there, or like what you're just saying there is no settlement at all? It's just continuous.
Yeah, it's just continuous.
Okay.
It's like that's why it's very much like a regular exchange. It's not a it's not a derivatives product in that sense.
And it doesn't key off of any indexes or anything like that because it doesn't have to settle, correct?
We do key off. We have a BPI, a Bitcoin Price Index, that's the average of the 3 big exchanges in China: BTCC, OK, and Huobi, on the spot price. And what happens? We enforce a trading band limit around that.
Oh, hold on. Like, say that again.
Yeah, you'll get to know it. Basically, we enforce a trading band around the BPI. I think it's plus minus 3%.
Okay.
Essentially, it disallows trades above or below 3% from the band, and the band moves as the price of Bitcoin spot goes up and down. The idea there is to protect, to have some what's a phrase? It's to have some sensibility in the price so that a big, someone with a lot of capital cannot come in, abuse the system, and create extreme volatility, like batting the price down to a penny or anything like that.
Yeah, yeah, because that never happens on any exchange, but
Yeah,
especially on a day like today. Yeah. Um,
yeah.
I guess so. It's kind of almost like a limit up, limit down feature on your 3% band, correct? Like, what you can't
Um,
get outside of that, or how does that work?
yeah, you can't get out. You cannot trade outside of it. You could trade within it, but obviously the band moves over time, right? I don't know, forgot however many minutes it updates. But remember, if when it's trading at the band, there's actually a lot of profit taking potential because you could be selling on the spot and buying on the pro, or buying on the spot and selling on the pro. You could make that 2-3% differential. It's a hugely profitable. So normally things wouldn't be near the band, near the ceiling of the floor. So there's a price ceiling and price floor, we call it. Normally it shouldn't be trading near there because people would come in and arbitrage it out. However, if a big order comes in and you eat up all the contracts on top, and it would get to the ceiling, and market makers would then bring it back down, for a huge profit.
Yeah, in theory. I mean, you're talking about like a limit up, limit down feature, which is pretty common in U.S. futures markets.
Correct.
Piz, did you want to ask that question that you posted in chat?
Yeah, I just wanted to ask there to clarify in your market and the settlements and lack of. So if I make a profit on a trade, I can immediately just withdraw that profit from the exchange, kind of like how a spot market works.
You could you buy low, you sell high, and then you made a profit. You could just withdraw. There's no waiting period. There's no lockup or anything.
All right, cool, thanks.
Okay, and then just kind of going forward here, talk a little bit about the overnight carry and how that kind of all works.
Yeah, the overnight carry charge is I think it's I'm trying to think. I think it's around 4%. On a the annualized is 4%, so it's a very small amount. It's a PBOC rate plus I think 2% something like that. And for long position holders, anything position that crosses midnight, I think it's UTC midnight, then it's assessed a carry charge. And for short position holders, you actually get a rebate. You get a portion of that rebated to your account. So if you're a miner, if you're selling position, we would give you interest on your because you're not receiving cash, right? Imagine you're trying to sell 1,000 Bitcoin. On a smart market, if you sold 1,000 Bitcoin, you would have the cash and you could hold it for 30 days and get bank interest. In this case, you sell 1,000 Bitcoins. It only costs you 5% margin, so you only have to post up 50 Bitcoins to have a short position of 1,000. And during that time, you would get carry interest for however long you hold the position for the whole 1,000 Bitcoins.
Okay. So now let's talk a little bit about the fee structure, which actually really confused me. So first of all, you talk about exchange fees for opening a position are half a yuan per Bitcoin. Why not a
Yes.
percentage? Like I've never seen it listed that way before.
Yeah, again, it's to be different and more innovative and easier for the user. We're trying to bring people into this audience because we know professional traders are few and far between. It would help the whole ecosystem, including you guys, when there are more retail people coming in and trade. It's to simplify everything for everyone. Essentially, it's a flat commission, 50 cents per contract per Bitcoin, and it's a one-way. We only charge it at opening, and that's it. And it helps everyone with their calculations. It's just easy, and we think it's better for everyone.
So I just went and quickly converted, half a CNY divided by the current Bitcoin price, and it comes out to like roughly 0.023%. So if anybody's curious, just because that's what we're kind of used to. So, it's interesting that actually, as Bitcoin falls, you'll be paying more of a percentage, and Bitcoin goes up, you'll be paying less. So, I mean, I see where you're going there. Now, closing positions is free. Now this confuses me. So delivery fees are 0.25%, but we don't have settlement, right?
Yeah, we don't have settlement. But if you ever, for example, this is we think it's a small case, but we're happy to allow for this. Essentially, some people might buy 1,000 Bitcoins. So what's the price? Let's say it's $300. Okay. So 1,000 bitcoins normally is $300,000, but instead you only have to post $15,000 because of the 5% margin to get that. But let's say you're making a lot of money and you actually want those 1,000 bitcoins. You want to take it out, as in withdraw the bitcoins. So what you would do is you would then fill up your account with the remaining cash for the $300,000, and then at that point you take delivery. That's the term, quote unquote delivery, and then we then allow you to withdraw the 1,000 bitcoins.
Okay. I'm a little bit lost on that one. Why wouldn't they just sell and move off exchange?
That's a good question. Some people would do that. Some people don't. It's up to them.
Okay. All right. I guess there's people that I haven't met that would want to do that. So, let's kind of.
Likewise, short positions, right? Let's say you're a miner. You're about to mine 1,000 bitcoins in the next 30 days, and what you want to do is you want to lock in the price today because you think it's a nice price level. So you pay 5% margin in cash. You would lock up the price, and then over the course of a month, you could then send in the bitcoins and then that cash. That would be tendering the bitcoins. It's the opposite of the taking delivery, but it's the same process.
I gotcha. Okay. I just pulled up. I'm going to take a little bit of a look at UI UX as far as that goes.
Yes.
I just screenshotted basically what you guys have right now, and actually, it's a pretty good start. It looks strangely familiar to the full screen of OKCoin, but that's what we like. So thank you.
Yeah, we picked the same color.
Yeah,
black, green, and red. What do you think?
Yeah, it works. But definitely, one thing I wanted to point out, and you can correct me if I'm wrong, that this little trade box here is actually the only order entry page for the Pro Exchange, correct? Like this is the only.
Yes, that's right.
Okay.
That's right.
So I wanted to make a point, and some people in here can probably echo it, is we actually do like, this is fine. There's plenty of people that love the full screen, and I'm sure this will get a ton of use. But we also like a little bit more of like a granular, page to itself that's just order entry. And I think there's kind of a misconception that the trader wants everything on one page. I bet nobody in here that trades has one tab open. we all have like 17 tabs. We're between Hyperon, Wisdom, Crypto Watch, TradingView. So we like a really solid order entry page, and I think that would be a good thing. Does that make sense?
Yes, absolutely. You want a dedicated, fast, high-performance order entry page that's no BS. Just vanilla order entry. Yeah. Yep.
And anyone else want to weigh in on that? I think I made it pretty clear. Did I miss anything? Theo?
Sounds good. No, that's true. Yeah, people like real minimal, like you said, vanilla, no BS order entry page. That's true.
Thank you, Theo. Yeah, and then one of the big things is as you guys get your product up and running, just for marketing and for awareness and we're gonna want to see it on CryptoWatch or Wisdom, TradingView. I know you guys have been on TradingView for a really long time as far as the spot exchange goes, but those are very important things for us traders. We're not always going to be using your charts, and although I praise you on your full screen, there's a lot of custom indicators that, like for example, TradingView has that a lot of us use. So just I'm sure that's probably something you've thought about, but just to reiterate that point is very important.
Okay, got it.
And I'm going to bring in Nomad here. He's kind of our back-end API guy. I know he's had a look at kind of the fixed documentation. Do you have anything to say, Nomad?
Sorry. I praise you guys on actually following the standard. A lot of places mess that up. Only had one question. Do you think that hosting a fixed endpoint in Amazon's cloud is going to add latency? It just seems like that's a bad idea overall.
What's a bad idea? Having a fixed
endpoint exposed on the internet on Amazon. It seems like just doing quick latency tests, it seems to go well over the spec normally for fix. That's why I'm asking if you guys have had any feedback on that at all, any customer concerns.
What's your recommendation instead?
Usually it's a physical connection for fix, but in general, but I don't have a recommendation as far as limiting latency and still being scalable.
Okay.
But I did a few tests through Amazon's cloud off the Northeast section, just like you have, and it was still like 50, 60, 170 milliseconds, which is way above the spec. So just curious.
Got it. Okay, so let us work on that.
Okay. Yeah, we brought in the expert as far as that goes, because I do not do very well in talking about the API structure. So thank you, Nomad.
Yeah. After the call, maybe Greg Wolfson can reach out to your team and get specific names so we could do one-off. Can get in touch with specific individuals for some of the feedback.
Gotcha. All right, and we're kind of running up on time. I like to try and keep these around the hour mark. So just a few, kind of closing questions here. So do you guys have a referral system in place? Maybe you have one for kind of the spot exchange or prior. Do you have anything focused specifically on the Pro Exchange as far as referral programs go?
Unfortunately, we don't yet. It's something we're working on. We're very eager to roll that out. Do you have any specific recommendations on what features you're looking for in that?
Well, I definitely will let Theo weigh in on this, but I think, off the top of my head, we do actually like a multi-tiered level for collecting lifetime, revenue off of a number of downlines. That if we have kind of, for example, we have our whale club team, it becomes a little bit less cannibalizing that we're, kind of pushing all together.
Yeah.
If that makes some sense. It's kind of just multi-level, multi-tiers. Theo, do you have, I know you're kind of the MLM guy, so do you have anything to add to that?
Yeah, I agree with you that, that's good, multi-tiers, because that's not offered very much at the exchanges. I think revenue share is a good model for everybody, because you guys benefit because you're only paying if the the users trade, and the affiliates get paid when the people they referred. So that's performance based. I think that's the best for everybody. So something like that, revenue based.
Yeah, and obviously cookie-based. Don't make it referral code. Lifetime revenue. I know some companies try and cut it off. The standard really in the Bitcoin exchange space is lifetime revenue. Between 10 and 20%. So that's just kind of something to work with, and just to be aware of, because I tend to talk to some of these exchanges, and I think they're like. They're not even in the ballpark, and that's what's been set, and that's what we're kind of used to. Not to say it can't be changed, but just to be aware of that.
Okay, got it.
All right.
Thank you.
And I'll just kind of open up the panel here for any kind of closing remarks, and I'll just go down. So, Theo, do you have anything left that I might have missed or that you wanted to ask?
No, I think we covered about everything. It sounds like people are just going to have to get used to your new systems and test it out in the wild and see how it goes. I do have a question. What about Litecoin or any other altcoins?
Yeah, at this point, we Litecoin. Maybe I should ask you guys: is there a strong interest? Would you all want to trade Litecoin? Is that important to you?
Should I ask your brother first, or no, just kidding.
I think Litecoin is interesting.
Yeah, it's a great speculative vehicle. So I think it's kind of a low-hanging fruit. If you guys are already, you guys have Litecoin Spot, right?
Yeah, we have Litecoin Spot. Yeah.
So it's just kind of a natural progression. So without getting into some of the crazier alts, I think it's there. Why not? And as you've alluded to, if you keep that kind of band, volatility band around it, now you have another profit revenue for some people that are arbing, the difference between Pro Exchange and spot LTC.
Yeah. That's a good idea. I didn't think of that. We were thinking of other currency, a direction of other fiat currencies, but we'll keep that in mind as well for Litecoin. For Litecoin, would you want to trade against BTC or trade against a fiat?
Both.
Actually, both is interesting. I think both, because sometimes people also like to transfer directly, so they don't have to go. Let's say that someone was really profitable in a Bitcoin trade and they're out, and they want to go into Litecoin now. Well, then if they're at some exchanges, they'd have to go from Bitcoin to US dollar to Litecoin. Whereas if you had a pair, then they could just switch directly.
Yeah. That's a good point.
All right, and both Greg and Bobby, thanks for coming on. Do you have any questions for us before we wrap it up?
I just want to once again express my thanks for arranging this. Thanks to everyone for participating, and we'd love to be strong partners of your team and your group. And through Greg or myself directly, please give us feedback. Let us know how you like Pro Exchange. It's really made for an audience like yourselves, and hopefully you can bring in people for Bitcoin trading. I think it would benefit the whole ecosystem and hopefully make everyone profitable.
Thank you. And Greg, anything else?
I think we're all set. I think I'm good. Thank you.
All right.
Yeah,
well,
my email address is bobby.lee@btcc.com.
Okay.
So please feel free to email me, any one of you.
All right, and we'll definitely get that on the show notes after. So I just want to thank Bobby and Greg from BTCC from coming on and talking about the Pro Exchange that may be of great interest to us as traders. And that's a wrap for this episode of Whale Club. Talk to you soon.
Awesome.